There are a lot of skills you need to learn as a real estate investor, but to me, there is one that is by far the most important, and that is deal analysis. You have to be able to look at a property and decide, is this going to be profitable? Or maybe it's one that I should avoid. Or maybe you're deciding between two different deals and you need to figure out which one's going to have the better performance. If you can develop this skill to analyze deals, you'll be able to invest in a correction or a booming market. You'll be able to do rental properties, flip houses, short-term rentals, creative finance, whatever you want to do. It is just one skill set that you learn, and then you can apply it to anything you want in real estate. If you have the right tools and you follow the right process, you can learn to analyze deals in just a couple of minutes. Before we jump into this, I'm going to show you a bunch of different data, tools, systems throughout this video. And if you want to be able to do this yourself and want access to all these tools, make sure to stick around for the end because I'll tell you about how you can get these all in one place. And I'll also even tell you how you can get my book about deal analysis completely for free. So make sure to stick around to the end. All right, let's get into this. And I think the best way to show you how to analyze a deal is just to walk you through an actual deal. So before started recording, picked this deal from the BiggerPockets website. It is a rental property. It's a duplex in Des Moines, Iowa at 2806 Brattleboro Avenue. It is currently listed for sale for $260,000 and they have a projected rent of $2,500. They think the cash on cash return is going to be at about a 10%. Let's see if that's actually true. So the first step in analyzing a deal, and I think there are three important steps here. The first is to analyze the macroeconomic climate. So we're going to look into Des Moines and figure out what's going on in that market. The second thing is we'll look at the housing market in Des Moines and figure out, are we in a buyer's market, seller's market? Because that helps you understand what you should be bidding, how much competition there's going to be. Then we'll get into the numbers of the specific deal to figure out, is this property going to cash flow and if by how much? And what is my return going to be over the lifetime of my investment? So first step, we're going to look at these macro indicators for Des Moines, and I pulled up three here. The things that I'm looking for here are the balance between supply and demand and how many potential buyers, how many potential renters are there going to be in the market. I just want to understand what's going on. I've never been to Des Moines in my entire life. This is actually the first time I've ever analyzed a deal in Des Moines. So what I'm looking for here are just the basics. The first thing I always look at is population. I just want to know, is the population growing? Because that really bodes well for supply and demand. If there are people moving to the area, if the area is growing, there's going to be more demand for housing. That helps push up prices. So what I see here on the top left here is that Des Moines' population is growing really solidly. In 2022, the last year we have full data for, it went up 1.4%. That probably doesn't make a lot of sense to you without context. So I put in the number, the red line below is the average for the US. And so you can see the average for the US is about 0.7% per year. So Des Moines is growing about twice as fast as the US average, which is really good. I like to see that. The second thing I look at, and the third thing, they're both really having to do with the labor market. So the top chart here shows the average hourly earnings for all employees. And you can see that it's pretty much on par with what's going on in the rest of the US. For most of the 2000s, Des Moines was actually outpacing the rest of the US in terms of population or in terms of wage growth, but it's been about average since the pandemic, which is good. I'm happy to see that. I just want to see that wages are going up at least average. So another good sign for Des Moines. The third one here is unemployment rate. I want to make sure that people are working and that the tenant base is going to be able to pay rent. And what I can see here is that the unemployment rate for Des Moines looks really good. Across the US, at this point of filming, at least midway through 2023, the unemployment rate across the country is pretty low, but Des Moines is actually even lower. It is below 2.5%, which is incredibly low in historical context and bodes really well just for the entire economic picture of Des Moines. So when I look at these three macro indicators together, what I see is a place that is growing, people are working, wages are growing up, all things that you like to see as a real estate investor. So the tool I recommend if you want to check out these types of macro indicators for yourself is the FRED website. It's the Federal Reserve Bank of St. Louis's economic research. Basically, they aggregate all sorts of public and private data so that you can find information just for about any metro area in the entire country, just like this, entirely for free. So that is a super easy way that you can just get a sense of what is going on in a particular area. The second thing that we want to look at, and moving on to the second step of deal analysis here, is looking at the housing market, because it's great that the macro indicators are good, but I also want to know, like, what is going on? Are there too many houses, or is it in a boom, or is it in a bust? And I picked out a couple of important charts here to look at together. First one, of course, everyone wants to know what's going on with the median sale price, and you can see that on the top left here. And just like every other market in the whole country, basically, the prices in Des Moines have been going up over the last couple of years. And I think what's important here, because everything's been trending up, is just to look at what's happened recently in terms of year-over-year data, because that gives us the most accurate picture of long-term trends. And what you can see here is that in the last quarter of 2022, it did go into a correction. So prices went negative in Des Moines for a couple of months, but it has now bounced back. And over the last few months, we've seen about 5% appreciation, which is pretty strong. So overall, Des Moines, price-wise, looks like little correction. Now it's looking like it's found its footing. It's not booming, but it seems to be stabilizing at least a little bit. Housing prices are obviously really backward-looking, so we only know what's happened. But if we want to understand what's going to happen, we can look at something called a lead indicator, which basically just helps us predict what's going to happen with prices in the future. And my favorite one is inventory, right? When we're talking about housing prices, we need to understand supply and demand. And inventory really helps us measure the supply side. When inventory is super low, that means that it's usually a seller's market and prices are going to go up. When inventory is high, it's a buyer's market. Prices are going to stay flat or maybe go down. What you can see here is that inventory is incredibly low in Des Moines in a historical context. When you go back to 2012, you see it was up to about 1,600, 1,800. Now it's, maybe a quarter of what it used to be a decade ago. So not a lot of houses for sale in Des Moines, but we also just saw that population was growing in Des Moines. So that creates a lot of ingredients for housing prices to go up over the long run. I'm not saying in the next few months it's not going to correct or adjust, but over the long run, that does bode well for housing prices. The last thing I want to show you here is the average sale to list ratio. This basically compares how much people pay for a property compared to what the seller lists it for. And this is going to be really helpful in step 3, but I just want to show you that for almost the last decade, in Des Moines, people are buying houses for less than asking price. So anything that's under 100 means that you're buying for less than asking price. Over 100 means you're obviously paying above asking price. And so, yeah, during the pandemic, we saw some months here where it was above the asking price. But right now, it is still below 100%, but it is trending upward. So that is really important when we talk about how we're going to bid on a property. If you want tools for figuring this stuff out, like median sale price, inventory, average list, you can go. I use Redfin. I really like their data set, but you can also go on Realtor.com. You can use Zillow. All this information is typically available for free. And these are 3 metrics I really recommend you look at: median sale price, inventory, average sale to list ratio. So we've already done the first 2 steps. That was really easy, right? We just looked at a bunch of charts to understand the macroeconomic environment. Then we looked at housing market charts to understand what's going on in the housing market. Now we need to get into the details of the deal that we're actually looking at. So to get into these deals, I'm actually going to move over to the BiggerPockets website and use the BiggerPockets calculator to run all the numbers, because you actually need to do some math here. So I just came here to BiggerPockets.com. You just go to Tools, Rental Property, and you get here. I'm going to just show you how easy this can be done if you have the right tools. So first things first, let's enter in the street address. It's 2806 Brattleboro, so I'm going to go 2806. So I'm going to type that in. It's importing our property data. I like to add photos. You don't have to do this, but I find it really helpful because I analyze a lot of deals and I want to just remember. I just remember more visually. So I find it helpful to just be like, okay, that's that gray duplex in Des Moines. You can put as many as you want. I'm just going to put one in because I'm trying to show you guys how to use this. We start here with property information. That was super easy. Next, we're going to just go to the purchase price. So for now, I'm going to just assume that we're buying it at asking price. Remember, we just looked at the sale to list ratio. We know people are getting properties for under the list price, but let's just see how it comes out using the full list price of $260,000. For my closing costs, I'm going to assume $4,000. And the way I do that is it's about 1 to 2% of the purchase price. If you're using the calculator and you have questions like that, you could just click on these buttons over here and it will show you like, look, typical closing costs are around 1 to 2%. If you're unsure, use 1.5%. Obviously, if you're about to go buy a deal, you want to like nail down this specific number. But when you're running a lot of deals like I want to do, because you never know which one's going to be the right one for you, and you need to like do a lot of deal analysis to figure out which one's right. So if you're just doing a lot of these deals, then it's easier to just use a shorthand. It's probably pretty close. So 4,000 is what I'm going to do. The second thing here is property value growth. Now, over the last couple of years, we've gotten used to seeing these huge increases in property values. I personally think that's going to slow down. I think there's a good chance we're in a correction this year. And so what I use is the average over the long term. So it might correct, it might go up this year. We don't know. But over the long run, properties appreciate about 2 to 3% per year. And because I'm a relatively conservative investor, I'm going to use 2% because I just don't want to assume it's going to grow like crazy. Next, so we're already done with property info and purchase price. So that's super easy. Now we need to talk about a loan. Most people use a loan to buy real estate. And as an investor, I typically put 25% down. If you're going to use a low money down option or want to even put more equity in to reduce your overall risk, you can do that as well. Interest rates right now, as of this recording, are pretty high. They're about 6.8%, so I'm going to use that. Points charged, I'm not going to do that. And I'm going to use a 30-year fixed rate mortgage. Obviously, if you want to use a different mortgage, you can do that. Next, moving on. I'm already moving pretty quickly through this. You can see how easy it is to analyze these deals. The thing you need to really get good at is this rental income piece, because that's a super important part. And so there's another tool that I recommend here that's Rent Estimator for BiggerPockets. So you just go to Tools, you go to Rent Estimator here, and we got this. And again, just type in 2806 Brattleboro 2006. So we're going to do the same thing. We're going to search this address. So what we're going to get here is the median rent, but this is just for one unit. So remember that this is a duplex, but it does say 5 bedroom, 3 bath. But when we go down here, what we know is that one of them's a 2-bed, and one of them's a 3 and a 1.5. So I'm going to run these two rents differently. So we have a 2-bed, 1 bath. So let's see what the analyzer thinks. So we change this to 2-bed, 1 bath, adjust details. And now it went from $1,475 down to $865. So that's really helpful to know. What was our other one? It was a 3-bed, 1.5 bath. So we have 3-bed, 1.5 bath, adjust details. So we have 1010. So it's $865 plus 1010. So far, if we were just getting the median income, like the median rent price, it would be $1,875. So that's probably backwards on your screen, but it's $1,875. Okay, so what's important to know here is that's the median. But when you look at this property, it's been recently renovated. It's super nice, right? We got stainless steel apartments, they're brand new floors, brand new fixtures in here. And so when I go back to the Rent Estimator, I can see that actually the high here is about 1713. Again, I'm a pretty conservative investor, so I'm not going to assume the high end here. But I think we're going to probably do, let's say 20% better than the median. So we're at 1875. I'm going to multiply that by 1.2. Okay, so I think rents are going to be about 2250. So I go back here, I put in 2250 as our monthly income and keep moving. Now we're on to expenses. This calculator has already pulled in taxes. We know what the taxes cost. So I looked this up for insurance, and it was about $2,400 per year for both sides of the duplex. Now we need repairs and maintenance, which I estimate at 5% because the property is in good condition. The seller has already done a lot of the work to maintain this. For vacancy, I always like to keep at least 5%, and capital expenditures, I do 5% as well. Capital expenditures are just like repairs and maintenance, but it's more long-term stuff like a new roof or improving the quality of the property rather than just like keeping things up to date, which is more what repairs and maintenance are. I don't live in Des Moines. Don't plan on moving there anytime soon. So I am going to hire a management company at 8%. And that's what I got for most of my expenses. Now, for me, I look for properties where the tenant just pays the utilities themselves. That's just easier. I don't need to get involved in that, right? Like they can figure out what they're going to use. They can pay for that. So I put 0, 0, 0. Usually I pay for garbage. I don't know why, I just do. So that's like not $125. Absolutely. It's like $20 a month. So I'm going to do $20 a month most of the time. And that's it, guys. We've done the whole thing here. So we put in property info, purchase, loan details, rental income, expenses. and just hit finish analysis. So that is what it takes to analyze the particulars of this deal. Now, after doing that, and I'm rambling on, you can do that really quickly. If I was doing this by myself, that would probably take me about a minute or two. So what I can see here already really quickly is that this deal offers about $230 per month in cash flow, which is not bad. The cash on cash return here is about 4%, which I would consider sort of on the low side. It really depends on your goals, on your preferences, what your target cash on cash return is. But for rental property, for me, I would probably look for something at least north of 5, maybe 6% for a cash on cash return. But this is not necessarily not a deal. A lot of times in real estate, what we talk about is that you don't just find deals, you have to make them. So when I look at this deal as is, using the assumptions I use off the bat, 4%, it's probably not, I'm not going to do that deal, to be honest. It's not good enough. But when I come down here, I can mess around with some of the assumptions and see if there is a deal here. I don't know yet, but I made some estimations about $2,250 for rental income. What if, upon doing some further analysis, obviously I'm trying to do this quickly, what if I could actually jack that up to, let's just say $2,450, $2,475. Now, if that assumption is true, now I'm getting a cash on cash return I'm actually excited about. 7%, that is a deal I would definitely do, particularly in this type of environment. I don't know if I can get that. I just want to show you guys that if you have a tool like this, that you can actually start to play around with these assumptions. So maybe you can't get the rent up. I don't know. But one thing we did see in the sale to price ratio that we looked at in step 2 was that you can often get property under asking price in Des Moines. So what if instead of paying $260, I paid $250? Okay, now I'm at a 5% cash on cash return. That's a little bit better. I might still not do that deal, to be perfectly honest, but it's getting close. Maybe if I can get $240. Guys, I don't know if you can get $240. I'm making this up. I'm just showing you that by learning this process and using these tools, you can figure out if there's a deal here. Right now, if I could pay $240 on this deal, 6% cash on cash return, that's a deal I'm actually interested in. So maybe knowing that, I would go to the seller and see if they would take $240. They might not. I don't know. This is just the point. You can use these tools. The other thing that you might want to check out here is if you live in Des Moines, let's put this back up to $260, say you pay full asking price. But if you live in Des Moines and you plan to self-manage and you go down to 0, then you're at a 7% cash on cash return. So you can see that there's a couple of different ways, even though a 4% off the bat is not that exciting. If you mess with some of these assumptions, I'm not saying lie to yourself, don't just make numbers up, but I'm doing this quickly. So if you want to go and offer lower, maybe consider self-management, see if the rent estimates that I made are accurate, because you may be able to find a good deal. Let's just put this back at 8%, use our initial assumptions, because I just want to show you the other information that you can get here. So you can see your property value go up over time. And even though the cash on cash return of 4% is not great, you can see that this deal actually is pretty good. After 5 years, you would earn 12%, which is still better than the stock market. That average is about 9%. But honestly, for most rental properties, you can do better. I think an annualized return about 15% with a cash on cash return, again, above 5% is what you want to be looking for. So I still wouldn't do this deal, but I just wanted to show you, I just picked this deal randomly. It's not the best deal I've seen, but it's close enough that I wouldn't give up on it. I would go to the seller and see if you can get some concessions. Maybe they buy down your rate, something like that, because this deal is actually pretty close. And I really liked the macroeconomic trends in Des Moines. I think it's a good place to invest over the long term. So that's it, guys. That is all it takes to analyze a deal. Just to recap, what I showed you is macro charts, super easy to figure out. Then I showed you the housing market. Again, all of that data is free. The third thing here, just go through these simple steps and put in some details about this property, and instantly you can see how good a deal this is, right? I hope you all understand how important this skill is. I could tell now within, I was talking a lot, but in 10 minutes, I could basically decide if this deal was worth buying as is, or if I have to go back to the seller and see if I can negotiate a little bit. If I was looking at another deal in Des Moines, I could now compare these two things side by side and say, maybe 2806 Brattleboro is the best deal I can find in Des Moines. Or maybe it's actually not a good deal at all and there are better deals all around Des Moines. By running a lot of deals and analyzing these deals and getting good at them, you are able to spot good deals, and you can really invest in any type of market. If the numbers make sense, that is really all that matters at the end of the day. Hopefully this demonstration has been helpful to you in seeing that deal analysis is extremely important. You need to be able to do that if you're going to invest in real estate. And B, it's not really that hard if you know where to look. For steps 1 and 2, those are free data sources that you could just go on the internet, use my recommendation. To access the other tools that I was using, the calculator and that rent estimator that I showed you on BiggerPockets, you do need to be a BiggerPockets Pro member. Over the course of this video, I've stressed the importance of having great tools. And BiggerPockets Pro is designed to give you all the tools that you need as a real estate investor to succeed. So if you become a BiggerPockets Pro, you get access to that calculator, other calculators too that will teach you how to flip or do the BRRRR method. It also gives you access to the rental estimator, among many other tools, some of our premier education tools, leases for every state in the country. It has everything you need because at BiggerPockets, again, we understand that having good tools and systems is the key to being a good real estate investor. If you want to become a BiggerPockets Pro, I obviously highly recommend it, and I have a great deal for you. Normally, this costs $390, which is honestly a great deal in the first place. Other calculators cost thousands of dollars. To join Masterminds group costs thousands of dollars. You get all of that at BiggerPockets Pro for $390. But just for watching this video, I'm going to give you 2 extra deals on top of that. First, if you use the code REVIEW20, that's REVIEW 20, you'll get 20% off. So you're only paying $312 a year for all of the incredible tools that BiggerPockets Pro has to offer. The second thing is just for watching this video, and because I love deal analysis so much, I'm going to give you a free copy of my book, Real Estate by the Numbers, which teaches you all of the detailed information you need to know to become an expert at deal analysis. So if you want to get good at deal analysis, highly recommend it. You can go to biggerpockets.com/pro. Make sure to use that discount code REVIEW20. That will get you 20% off the Pro annual membership and a free copy of my book. Thank you all so much for watching. I really appreciate it, and I hope you learned something about deal analysis. If you have any questions, make sure to put them in the comments below. I'll see you all real soon.